Welcome back to the channel, everybody. Hopefully you guys handled the volatility in the market as of late. Noted, this video could be well into the future and other people could be seeing this, but yesterday we had a crazy dip in the markets. Currently it is February 3rd, 2025, but the things I want to go over in this video, they can last a lifetime, and I just want to put my stamp on this one. The way to play the game when it comes to these altcoins. Number one, always focus on never marry a project. Remember what you're in this market for. You're not in it for the technology. You are not in it for the innovation. You are in it to make an investment, make some money, and then live a great life. That is what you're here for. Who knows, maybe in the distant future, things change because things are changing rapidly in the crypto space, but reading a chart will not change. Anyways, when you find certain assets that are this low, this is what I refer to as the buying zone. So let's start going over what the buying zone is. Let's go over what your accumulation zone is. Let's go profit taking levels, all of that. This is what I want to cover in this video. Hopefully you guys stick around to the end, and if you do, hopefully you like and subscribe to the channel. We do live stream every single day, and you guys should definitely join us on some of those live streams because we do cover great entry points, great places to think about taking profit, because I don't give financial advice ever. It is all for entertainment value. But let's use Kava here. For instance, right now, I'm going to be getting your weekly levels of support and resistance. These are areas in which you see price action take a turn, whether it be to the upside or to the downside. Either way, these are just levels you want to keep in mind as the price is moving. So right now we have two levels right here where you can see great accumulation, but right here's the difference where it fell below. Anyways, let's get the rest of these levels and then let's start talking about that accumulation range. So right now, right this moment, Kava, you are in the ultimate accumulation range. Anything below 61 cents, this is an absolute fantastic buying opportunity, because last time you were in this zone, you got to see yourself fly out of here. This is absolutely beautiful, and we have the data to show it, which is even better. Last time you were down in these levels and you were holding support, you saw yourself fly up 1,112%. This is 11x. So if you put $100 in here, you are going to think about profiting $1,112. I think that's a pretty nice return, but that's just my opinion. You guys can tell me what you think in the description down below. Anyways, let's look at some more levels that we would really want to focus in on. These are levels that price interacted with either positively, like the bounce right here, or negatively as the back test at resistance before seeing further downside. So this right here, you can tell, once you broke above it, it was utilized as pretty darn strong support. Once you broke below it, there was no seeing any light above it. So that is a big problem and something you want to pay attention to as prices come up. Because guess what? If it happened once, it is a strong possibility it happens again. So therefore, right now, what I would be looking at is that is my first profit taking level. For me personally, what I would be doing at this $2.22 level, I would be considering selling off a portion of my holdings that I accumulated from down here. So let's just say I was accumulating at the current price and it shot up there overnight. I would be making 336% on my investment, but I would not take out everything. I would just be taking a portion of my holdings and then waiting to see if price comes back down, where if I still enjoyed this project, I could buy back in at a lower price. This is referred to as buying the dip. So if things still look bullish to me and I think it's going to go higher, I would then put what I took profits on back in there to accumulate more of this asset for more upside. Anyways, let's go into further upside targets based off the price action. We have this level right up here that it acted bearishly until it broke above right here, held as support. So that is going to be a very important level that I'd want to focus on, and noted that would be a level in which I would consider taking a lot of profits at. I mean, maybe anywhere upwards of about 50% of my holdings would more than likely be taken out at this point, just so I can take some risk off the table. Next up, we would be looking at this level right here, because this is nearly at all-time highs, and then of course you have your all-time high weekly candle close sitting at $8.50. Now, another thing that some traders like to do is once you do see the reaccumulation, they like to go with the golden retrace. This is where we actually pull out our Fibonacci retracement level. We go from high to low. Your golden retrace is going to be between the 5.0 and the 618. These are percentages based off your high to low price action. So right now, as a golden retrace, we could be looking at price coming up to $5.80. That is almost a 1,000% gain. That would be a fantastic area in which people would be thinking about taking profits and then waiting to see if prices come back down. If they do, hey, now you have some money that you can buy the dip. Anyways, this is also another way you can prevent yourself from becoming exit liquidity. Now, let's go over, since we have our weekly spots of interest, our support and resistance levels, let's go into a little bit of pattern analysis. So right now, what you can see on the weekly time frame is you did have a downtrending level of resistance that is still in play today. So you know for a fact right now, you are still in an accumulation range. On the bottom side, you do have a supply line right here, but you can see how it's converging into a wedge. This is referred to as a falling wedge pattern, and the majority of the time, these do like to break to the upside, especially when you see them on higher time frames. Higher time frames meaning the monthly, the weekly, or the daily. And once you start getting to the end of them, just like this, while holding major support, you're expecting a breakout and possibly a back test before seeing much higher prices. Noted, another way of thinking of taking profits on a structure like this, you do take the widest part of the wedge, you take a measured move, and then you bring it out to where the back test could be, or where it is. You still have time to accumulate even after the breakout, because you need confirmation that it's not going to go any lower. So what ends up happening, generally speaking, you break up, you come back down to support, and then you start running. But even right here, some people like to take full profit at measured moves. You would be looking at 286% to the upside when this thing gets there. Anyways, let's move right along. Another thing that you should pay attention to is your relative strength. That is this right here. This is showing the buyers and sellers. What you should notice is if there's any divergence. So right now you can see you have a low and a higher low on your relative strength on the weekly time frame. This is a very major time frame, so you need to take this into account while you are looking at these charts. The higher the time frame, the more relevant it is, the more important it is, the more weight that it holds. Anyways, you can see a low and then a higher low. Let's see what your price action was doing. You had a low and then you had a lower low. This means there were people gathering this asset up as prices were going down. There is more strength down here than up here, which means it is getting ready for a breakout to the upside. This is beautiful. This is what you really do want to see. Anyways, another thing you want to see after you find the bullish divergence is a higher low, preferably testing support. And here you have it. You were low, you popped up, you now set a higher low, and you're starting to move to the upside. So this right here has all the makings of number go up. This means this could have the opportunity at finally starting to make a run to the upside, trying to get to that golden retrace. Absolutely beautiful to find these patterns. They don't come around very often, but when they do, definitely just work toward capitalizing on it. Now, when I mentioned earlier accumulation ranges, what I meant was basically low prices in which you want to buy as many as you can, dollar cost average. And what I like to do personally is when I find, let's just say this level right here at $1.19, how it was acting as resistance, and let's say I wasn't in at these super low prices, anywhere below 61.93, then I still have an opportunity to accumulate this token in this zone. Anywhere below $1.19 is still a very good range in order to buy into this token, and thinking you could get a lot of upside potential. And this is how you play the game, because noted, ever since you dropped below this level, back in November 7th of 2022. Currently, at the time of recording this video, it is 2025. You have had nearly 3 years. So you've had 2 full years. You could be dollar cost averaging into this asset underneath $1.19, and you are solely focused on the hopes of just getting that golden retrace. So let's say you got the golden retrace from this higher level at $1.19. Let's just say that you could be looking at the possibility of 375% return on your investment. This is what you're looking for. However, there are plenty of people who would decide, I'm not going to DCA into this until I see confirmation that, hey, we are going to go up. So the dollar cost averaging for a lot of people would have happened right here on December 16th, 2024. Basically indicating for the last 2 months straight, they could have been dollar cost averaging. Anything underneath 61.93 is your optimal buying zone. But remember what I said about those back tests, those confirmations, you will have more time to DCA. So what is very, very likely to happen is you could end up seeing this pop to the upside, go as high as 119, come back down as low as this 37 cent level, come up, get another higher low, and then start running to the upside. This could literally take you all the way out till March of 2026. This could take you another year before you start seeing that great return on your investment. That is kind of the nice thing about these higher time frames when it comes to you accumulating these assets and focusing on, hey, I want to make a very large sum of money over time, so I want more time to accumulate the asset while I know or have a better idea that price would be going up. This way also you're not going to be FOMOing in when this thing like shoots straight up to, let's just say it shot straight up to $2.22 and then it starts rolling over, but you saw it at $2.22, so you started buying in and then you saw the price fall, you get scared, you sell it off, then it goes up again. Now you're just chasing green candles. A lot of people do it. That's what we refer to as exit liquidity. You don't want to be exit liquidity. You want it to be in your ballpark. You want all the advantage. You want all the gains. So you want to find patterns just like this in order to start making your decisions when it comes to jumping into these projects and trying to make the most bang for your buck. Anyways, going into your daily time frame, this is going to give you added confirmation on what is going on. So this smaller pattern right here, this is where you'd be focused on, oh, are we going to continue going up or are we going down? So what you really want to see is any form of divergence. Now this on the daily has a different form of divergence, one that a lot of people don't see too often because it is quote unquote hidden. So what do I mean by that? I mean right here. You have your price action from here to here. You have a lower relative strength after that pullback, which, okay, that's fine. Maybe we're going to get oversold. Just maybe. But let's go out to the price action and see what happened here. So right here, from this low, that was where you put this low in, right here. And then you have a higher low, which gave you a hidden bullish divergence. So the reason why it's hidden is because you were coming down. No one expects this relative strength to be lower than the previous low. So this is hidden bullish divergence. This means you have more runway to the upside than you did before to the downside. So this is a very good sign, very bullish sign that you could see an extremely explosive move to the upside, because normally what happens in these situations, you have short sellers that are offsides pretty much, and they are about to get liquidated because price is showing signs that it's going to go up, and go up it did. However, it was a little weak because we are in this major consolidation pattern. We are still waiting for the breakout, but anyways, I digress. This right here, the hidden bullish divergence, is a sign that price should not, and I'm saying should because this always could fail, but price should not fall below 37.58. Should not go below that anymore. You should be able to accumulate this thing and know, hey, my investment is safe at these levels. It should not drop below 37.58. So now, from a Fibonacci retracement level, there are going to be some people who trade this asset a little bit differently. They like to go on lower time frames. They like to do more of a intermittent time frame style of trading. So what they'll look for is you are in a downtrend, you now have your second leg up that they are focused in on. So this is what I mean by the breakout could be coming. So you broke out of this downtrend while not touching support, showing the strength of this asset. But you could very well see this thing rally up anywhere between the 1272 and the 1618. These are your likely places to go. Noted, they can go farther, but these are the likely places to go. So some traders out there will be focused in on the 93% upside move that Kava, in this case, could be going on. Noted, you do have overhead resistance at $1.19. You're pretty close to overhead resistance, so it could go even further and make a 123% move to the upside from the point of me recording this video. From that point, I personally would be looking for a pullback and possible backtest of 61.93 as support because it was acting as resistance. So then the new accumulation range, anything in this range is now my accumulation range. If it drops a little below 61, that's fine. I've been accumulating in this range already. I'm okay with that. As long as we don't get below 37.58, I am perfectly fine with the price action. I can buy into this. We are perfectly good, and I can start accumulating this asset, knowing sometime in the near future we should see this thing go up in a very big way, and then I can profit more off my investment. Hopefully this video has been a solid explanation of how I like to look at the charts, how I like to do my swing trades, how I like to do my accumulation, and how I like to avoid becoming exit liquidity. If this does help you out, please hit the like button, maybe even subscribe to the channel, catch a live stream sometime. I am here to help where I can, but also just getting the information out there, because I feel like a lot of us could benefit from this. We've been living on hard mode for far too long. Let's start moving into the easy mode. Let's start making some very good decisions when it comes to your investment strategy, as well as great times to buy in. I hope you guys have a great day. I will catch you in the next one. Take it easy, and always, 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 if you're trading, use a stop loss. Take it easy. Have a good one. Also, check the description down below. We have a free Discord. Maybe you want to join the community. All right, bye.